All right, so Gary, 2026 is supposed to be one of the worst renewal years in recent record or recent insurance history. What the heck's going on? Let's start there.
Yeah. Well, we have kind of gone through our renewals for January 1st, 2026, and they are the highest that I've seen in my 25-year career doing health insurance for organizations. And I think that what is going on is, first of all, there's always inflationary pressure from the providers. We'll talk about that in a second. But I think specifically, and I've got a slide to show.
Oh, nice. You came with graphs. I love it.
I'm ready to serve. So one of the things that I've been thinking about is that, 24 months ago, we had really high increase to the CPI, the consumer price index. And this slide shows, about that time when we were talking about high single, low double digit inflation, that if you're a healthcare provider, like a doctor or a surgeon, you can't just change the sticker price on your services. As far as insurance companies are concerned, you have to wait until the next round of negotiations, which can be 2 or 3 years. And so I think one of the things that we're seeing kind of seep into the market right now is the high inflation that we saw a couple of years ago that's driving premium prices up even higher than we're used to. For me personally, in any given year, I might have one or two clients that have a 25% increase. But this January 1st, 2026, I had 12.
Wow.
So there is, and that isn't because their claims were bad. It's just a general elevation in the increases that we're seeing. And I think it's because of the inflation that's working its way into provider contracts.
Okay, so you feel like this is a delayed reaction to the spike in inflation we saw a couple years ago. It's working its way through the system, and now those contracts are being renegotiated, and the kind of spike is being felt across the board as we go into 2026. So, what does that look like? Is this true in your charter school clients as well? What are you seeing across the board as far as charter school renewals? And what should schools be paying close attention to here? What's the implication for them?
I would say the implication is be intentional in how you approach your renewal in 2026 and be ready. I would go in prepared to make tough change. And then if it's not a bad increase, fantastic. But crossing your fingers and hoping you're the one group that doesn't get impacted by inflationary pressure in the market is not a strategy. And so I think that the nugget of wisdom here is be ready. And if you're going to do research, if you're going to explore other options, if you want your consultant to do additional work to be ready, start sooner than you have in the past so that you have the runway to do what you need to do for your organization to be successful.
Yeah, it feels a little bit like renewal time is almost like a jack in the box where like people are cranking the wheel and you're sort of hesitantly waiting for the renewal number to pop up and you hope
Yeah.
you're not completely terrified. I want to talk a little bit about what are the actual cost drivers because I think to your point like schools need to be proactive here, and rather than just sort of sit on your hands and wait and see how bad the renewal is. I'd love to unpack a little bit about what's actually driving those costs for a school's health plan. Because I think most of us don't really understand, I certainly don't, exactly how the sausage gets made, so to speak, and
Right.
haven't really taken the time to look into the big drivers of plan
Yeah.
costs. Could you unpack that for us a little bit?
Yeah, yeah. Well, before I've got another slide that we can pull up, but I'll just say really simply, because as an insurance professional, I'm guilty of too much technology jargon, industry jargon. what drives up health insurance costs are increases in prescription drugs, increases in hospital care, and then increases in the cost to provide the insurance structure itself. And so, really, the greatest indicator of or what drives health plan increases every year is inflationary pressure from the market, where they're having to adjust to what they're having to pay there on their new provider contracts, and increases in prescription drug, for example, costs are a big threat for health plans, no matter where you are. Fully insured's going to feel it. Everybody's going to feel it. So those are the primary two drivers. And I can share how does that get to the premiums. This is speaking of the drivers of health cost, this is kind of another example of what we're seeing recently with rising health costs. So what this graph is illustrating is the industry tracks the frequency that we see $1 million claims come
Okay.
through for payment. So this is an indicator of how many of the $1 million claims we're seeing per million covered employees. And you can see the percentage increase from year to year. And so I think that this is kind of indicative of what we were talking about with the renegotiated provider contracts, is that moving into 2024, throughout 2024, we saw a 30% increase in $1 million claimants.
Yeah, that's crazy.
And Americans aren't getting sicker, right? It's not that we're suffering some huge increase. We're doing great controlling costs. But I think that one of the things the general public loses sight of is it is flipping expensive to bring a drug to market that is going to cure your or uh, prolong your life with a cancer diagnosis. These things are all very expensive, and I think that this is another indication of what we're seeing is we're just seeing more large claimants, higher claims, higher prescription drug costs. I don't think that this will be forever, but I do think that right now, this wave that we're going through in 26, maybe 27, is tied to that inflation we saw 24 months ago.
So this data, if you were to, apply it to the charter school market, um, for clients in, that you all serve, or in data that you've seen across the market, what are the big cost drivers for charter schools specifically? Are there any notables in the just kind of population of employees that work at schools that are big cost drivers? Have you noticed any shifts there? I'm curious, as
Yeah,
people are thinking about their own kind of
yeah.
FTE population.
No, we've got some great data on charter school claim utilization from our charter practice. We get to see all that information. They get to see it all. And the interesting thing about charter schools specifically is they do really good medical claim wise relative to the general population, except in two areas.
Okay.
And everybody could probably guess them: babies, maternity. We have more maternities than the general population. I don't think that shocks anybody, but maternities can be one of the most expensive stop loss claims that happens in the industry. So
Sure.
that's a risk. And so we got to work to manage that. And then the other thing is mental health, but specifically for mental health utilization more than anything, charter schools use it higher than the general population. I would say those are the two primary areas. Other factors don't really impact charters as much. We see it, but it isn't as much. And the thing is depending on what structure you're in, the fact that you are running well, that your claims are relatively low relative to other employers, you don't get rewarded for that in all of the different structures that charters are using. And so I think that is kind of goes back to my nugget of wisdom is as you diligently turn over rocks for solutions as your health insurance renewal comes this year, be sure that you're exploring the different structures, because based on the structure that you're in as a charter school, there are advantages that you can reap that other employers may not when you come out of the general fully insured market or even the
Can you
partially self-funded market.
Could you give us some examples or maybe walk us through some of the common structures? Because I think for some folks, you might be super familiar with this. For the layman like myself, I hear plan structures and my eyes start to glaze over a little bit. Could you walk us through what are some of the common structures schools might find themselves in, and maybe walk us through some of the
Yeah.
differences?
Yeah. Yeah. I've got something I could share on that. But let me just say first, if you think about what an insurance company is, if you exclude like Kaiser, for instance, because they're a little bit of a one off these days, but if you think about what an insurance company is, they're kind of a lender and an accumulator of funds and a middle person. So, what does that mean? The insurance company itself doesn't have doctors, they don't have hospitals, they don't have surgeons. They enter into contracts with providers and surgeons and hospitals, and they make those payments on your behalf when your employee incurs a claim in under that contract. That's what drives the amount that the insurance company pays. And they've got plenty of cool tools like their website. You can go in and see how much your deductible has been exhausted this year and get recommended to a provider and such. But outside of that, they really take in employers' dollars, they aggregate it, they pay out the claims based on the contracts they have in place, and they make money. And so the important thing to understand when we talk about structures is that all of the structures that are in place, they're very similar. It just really comes down to what the financial mechanics are behind the structure. And so, what I'm showing here is kind of a very common structure that an employer would put in place, or what your health plan looks like behind the scenes. You never see this unless you're in some kind of self funded structure. You just see the premiums that you have to pay on a monthly basis based on who's enrolled in your plan and the
Right. So
plan
this
design.
is what's actually inside the
The belly of the
behind the
beast.
cur
Yes.
yeah, behind the curtain, so to speak.
Yes. Yeah,
Okay,
behind the curtain. So we've got an employer if you're self-funded, or a carrier if you're fully insured, and three primary components. You've got the administrative piece. This is everything that puts the structure of the health plan in place. So they'll pay the claims, they build your website, all of the skeleton of the program, which includes the healthcare provider network that you're going to use. So this might be, people may think of their insurance company as their network, which isn't necessarily always the case, but this might be the United Healthcare Network or the Blue Cross Blue Shield Network.
sure.
This is the PBM contract, and this might be, you know, one of the numerous prescription drug vendors that are out there that you can do business with that lets people have their drug card. They can go to the pharmacy, etc. All this area is really just to create that structure of the health plan itself. It gives your employees a way to go in and engage either at the pharmacy or at the healthcare provider level. And then you're open for business. Employees start going to the pharmacy or the doctors, they start incurring services. We reference the contracts that are in place between the healthcare provider and the insurance company, and we start paying claims. And that's over here in this orange area. So, under the claims incurred section, you've got medical and pharmacy, and we're basically paying the claims that are presented for payment from all of the healthcare providers throughout all the network that your employees receive. We're paying those claims with the premium dollars that the insurance company or the self funded employer collected. So there is almost always something that we would call stop loss insurance, or if you're looking specifically at the fully insured model, they call it the pooled insurance or the pooling point. And this is going to be a limit of how much an employer can be impacted by a single claim. So it's going to put a ceiling on the risk for an individual person throughout the year on your health plan, so
Right.
that if you're a 100 employee charter school and you have one person who has a we had a $3 million claim once on one of our charter schools. They had a stop loss limit in place, so they were only on the hook for a first portion. Fully insured does it the same way. They just factor it into what they include and exclude in your underwriting workup. It's a little bit more transparent under stop loss, but the point is that when we talk about the different structures, understand they all basically work this way. Your employees still get an ID card. They'll still have a plan design. They still have a network that they plug into. They still have a website that they go to. But the difference is, and I'll just jump, the difference is the extent to which the carrier manages it, which you can see here on the left hand side, or if the employer and consultant manage it over on the right hand side. And you can say that there is a spectrum of structures that charter schools can use for providing health insurance to their employees. A very commonly known one is fully insured. I think the vast majority of charter schools in the country use fully insured. I think 80% in that survey that BIQ did several years ago. There is a step to the right into what's called a level funded or a graded funded or a partially self-funded product, where you take on a little bit of risk and you have the opportunity to reward if your claims run well. And then you take one step further into captives, which are organizations that bring self-funded employers together to have less collective risk self-funding, because there's a bunch of cool things about self-funding. It's a nice place to be. It's the reason why, you know, 85 or 90% of private employers and school districts that are over 200 employees, there's a reason why they self-fund. And that is to get the transparency, to get the control, to be able to control the benefits that you provide your employees, and to be able to manage your risk better than an insurance company might. And so each step to the right on this spectrum that we're looking at here is a step towards being completely employer and consultant managed. And that might sound a little scary, but I think the important thing that is lost on a lot of organizations, especially charters that have grown and now they're a charter network and they've grown from 300 employees to 800 employees, is that once you get to about 400 employees, your renewal is based on your claims, no matter what structure. So it makes a lot of sense to a lot of organizations that if their renewal is going to be the same, it's going to be based solely on their claims. They want to be in the model that allows them the greatest freedom, control, opportunity to manage claims, etc. So I guess my only message to the audience is this is the new landscape for health insurance. And I would encourage you, because this is usually number 3 or number 4 budget item on any charter school's budget, is health insurance if you break it out
Right.
from
Right.
compensation. So
And how do these different just bringing us back to the top of the conversation around some of the macro, pressures at play that are causing really high renewals in 26 for schools that, may be in one structure or another, how does if the basic kind of insurance model is the same, but then the structures allow for different levels of freedom and different benefits around, the more self-funded you are, the more flexibility you have rather. How does the plan structure play a role in the renewal cycle and cost in managing cost? I think like ultimately I feel like that's the big question is how does the plan structure allow better management of ongoing cost increases?
Yeah, yeah. Um, I would say generally that if you're a 600 employee organization and you're fully insured or self-funded, your underwriting and your renewal are going to look very similar because of the way that insurance companies and stop loss carriers underwrite larger organizations. But kind of going back to what we talked about earlier, think about when you're in the fully insured structure, the insurance company has built everything for you and put it into a box and said, we will sell this to you, this package, these plan designs, and all of these additional bells and whistles. And this is the premium that you pay. In the fully insured structure, it's hard to make innovative changes to your plan that the insurance company doesn't do because you've bought it in this offering and you can't plug and play different solutions. It's really kind of a closed system that doesn't allow as much opportunity to manage claims as in the self-funded space. And so I would say when you asked me about the difference in the structures and how it impacts renewals, it's the more open architecture you have in your health plan, the greater opportunity you have to plug and play some of these cool vendors that are coming to market and providing healthcare to employer groups in different ways based on different negotiated contracts than the traditional healthcare networks have in place. And so it increases your control. It increases and in the fact that it's more of an open architecture model. So you can bring in a vendor that could impact your prescription drug claims that you wouldn't be able to bring in a fully insured model. And so I think they're underwritten the same, but when you go to renewal time and you're thinking about your strategy, you have a lot more opportunity to control claims cost in a self-funded structure than you do fully insured.
I see. So what you're saying is like, for example, if we're a charter school and we have lots of babies and mental health is a big cost driver, we have the flexibility to think about how does our plan cater to those needs versus, an employer that has an aging population and maybe needs to be thinking about a different set of benefits, so to speak, for that population.
Yeah.
And you're saying when you don't have the flexibility to do that, you're off the shelf kind of,
Yeah.
fully insured renewal. There's just not a lot you can do, it sounds like,
I'll
in
give
order
you
to
an
be creative.
example, a simple example. One of our charter networks wanted to encourage all of their pregnant mothers to go to this maternity program inside their health plan. And all insurance companies offer these maternity plans, but because they were self-funded, they had the ability to waive the deductible and out-of-pocket expense for the member if they used the program. And so that's just simple flexibility that allows you to be more creative with the way that you offer health insurance and health coverage to your employees. And it's pretty neat, pretty cool stuff that's going on out there.
All right, so let's get into kind of brass tacks here. Let's say I'm an executive director, CFO, maybe I'm even a board member of a charter school, and I hear, "Hey, schools are getting crushed on health insurance renewals, and I'm already nervous about our budget." What are some practical things that I can start doing kind of ASAP to prepare for the upcoming renewal season and really to better understand the current, plan or structure that my organization might be in?
Yeah. That's a good question. I think the actually, I think it's a pretty simple answer, but it's not going to be very shocking to anybody, I don't think. But charter organizational leaders aren't insurance experts, but Health insurance increases have been outpacing per pupil revenue increases ever since I've been in this industry. So every year that you get a bigger increase on health insurance than you do on PPR, your total compensation budget shrinks. And so for this type of expense and for the role that it plays in attracting and retaining the talent you need to accomplish your mission, I just think they need to get more involved. They need to ask, what who's our partner? Who's our broker or our consultant that is helping us navigate this huge part of our budget? Do they know what they're talking about? Maybe talk to some of the other charter networks that you respect or charter schools that you respect. Reach out to them and ask them what they're doing, because there are some charters that are being really innovative and kind of taking this thing by the tail. And there are a lot of charter organizations that are continuing to kind of accept the status quo. But I think I think a lot of people are going to wake up this year because I think it's going to hurt.
What's the like paint I don't wanna be all doom and gloom, and I do think it's good advice to say, "Look, you need to get more involved here." Paint me the positive side of this, like, let's say we do take a more strategic approach, we do get more involved. What are some of the what's the data you all have on schools and the type of savings or cost management they've been able to see when they take kind of a strategic approach here?
Yep. Yeah. I would say probably the best example of that are the charter schools that we have in our health insurance captive, because they're able to be in the completely self-funded structure. They have open architecture. They can plug and play different claim management tools. We launched that in 2019, and on average, those charter schools are saving about $200 per employee per month on their health insurance relative to a modest 7% increase trending their old program. And so, what are the advantages? I think that it's strategic and it can take a little bit of time. There's no super quick fixes, but I think that you're looking at being able to improve your spend by that amount, probably about $2,400 per employee per year, $200 per employee per month. And those charter organizations, all of them have used those savings to actually enhance their benefit offerings through stronger mental health benefits, for example. I think that's the goal, is
Yeah.
to, instead of sending money off to the insurance company, can we do something more innovative with this offering to our employees? Doesn't take anything away from them, maybe even improves their employee experience, but minimizes the cost for us. I think that's the goal. And so if you get there, I can tell you, like, the positive side of this, not being doom and gloom, these organizations have built hundreds of thousands of dollars of reserve that they have saved up for rainy days. They've improved their employee benefit offering. They have more sustainable, predictable increases. There's a lot of positives to that, but it takes a little bit of work. I think the executives of the organization need to get involved and treat this like they would treat any major threat up there on their, top 5 budget items. It is going to continue to go up. I think that the ray of sunshine is, I do think that this is a wave that is mimicking the wave of inflation that we saw. I think that if you're strategic and you start putting these programs in place, 2026 aside, I think we'll get through that and we'll return to what we would consider regular increases
Sure.
of high single digits. But I think that you're in a better position to succeed even when it's not, code red season. Continue to beat the market.
Alright, well, that's a perfect place for us to wrap. So, where can we send a school leader who wants to learn more about, this in general, maybe wants to learn about the National Charter School Captive Hub runs? Where should we send them?
Yeah. I think a good starting place, so that you don't have to be exposed to um, myself directly initially, but I think a good place for them to start is at hubcharter.com. They can go out there, they can read some case studies, see what we're about. We've been in the charter school space since 2008 out of Denver, Colorado, and love the space, love the mission, and we're doing some interesting things. I think that is, self-serving, but uh, we are in it to help charter schools succeed. And so I think that at the very least, we'd love to have a conversation and we could share what we know about the health insurance market. Um, and the other thing I would say is they could email me directly. I'm sure you have a way to pop it up there. So um, shoot me an email, visit the website. Good luck.
All right, perfect place to wrap. Gary, thanks so much for spending some time with us and the
Yeah.
breakdown on the current market. We appreciate it.
Yeah. Thanks for having me.
Thanks for listening to Charter School Insider. This show is brought to you by BuyQ, the group purchasing organization specifically for charter schools. Want to learn how to maximize your school's purchasing power? Join together with thousands of other charter schools by visiting buyq.org/sign-up. BuyQ's purchasing program is free and has no obligations or commitments required. If you enjoyed today's episode, do us a favor and subscribe on your podcast listening platform of choice. If you have a question or feedback for us, we'd love to hear from you. Send us an email at podcast@buyq.org. Thanks, and we hope you'll tune in for the next one.